Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 2nd of September. I'm Daniel Lam, your host for the podcast. Well, we've been witnessing some very hefty moves in Hong Kong China equities over this earnings season. Now, broadly speaking, investors have been chasing stocks that have announced exciting news over AI, while being lukewarm or even taking off positions in stocks that have been suffering from excessive price competition. Now, in general, investors see further shakeup in the space with overcapacity. And eventually, the largest few will survive in what would be a less crowded space. But that can be a drawn-out process. So in the meantime, they go for the trending sector in AI, especially that there is good government policy news, such as the National Development and Reform Commission accelerating the rollout of a 500 billion CNY new financing policy tool, which was announced in April, to support emerging sectors such as the digital economy and AI. So this results in the markets becoming much more micro rather than macro in Hong Kong China equities, or rather in technical terms, more alpha, i.e. stock picking versus beta, which is about the broad market. So for example, despite the latest move from an index heavyweight, where the results show an aggressive pivot towards AI development, the Hang Seng Index is still in a very tight range overall, between 24,000 to 26,000, and the latter level or thereabouts being a key resistance level. Now, what about the red-hot onshore, i.e. the A-shares market? Well, it has shown strong momentum, with the Shanghai Composite Index reaching a decade high, and the total market cap of A-shares exceeding 100 trillion RMB. Now, policy developments and market liquidity conditions stay favorable. Chinese households are increasingly reallocating savings into equities, while elevated northbound capital flows show reasonable offshore interests. And companies are increasingly prioritizing shareholder returns over capex expansion. Now, similar to the offshore market, the strength in onshore equities a lot of that come from semiconductor and AI-related space. So therefore, the CSI 500, which comprises of mid and small cap companies, have been rallying quite hard. But from a technical perspective, the market is overbought. Valuations are also expensive versus its own history, with 12-month forward PE trading at one standard deviation above the 5-year average. So overall, we believe that there are good stories in single stocks in the Hong Kong and China markets, but the broad index may be pinned and moving sideways around the current levels in the near term. Thank you very much.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.